Good morning, traders. This is Perry Wilkey. Good morning, traders. This is Perry Wilkey with Startup Trading. It is 8:43 a.m. Eastern Time on Friday, July 31st, 2020, the last trading day of the month, obviously. So looking back at yesterday's action real quick, we can see that the Russell is inside. And just as a side note, the last three bars that you see, I took these pictures a little bit later yesterday than I normally do. Usually I take them around 4:15. I took them after 5 p.m. so we could see the Apple earnings in here as well. So these last three bars that you see on each of the charts are after the bell close of the day. So as we look at that, first, I'm going to focus on the action before the earnings, right? Where the market was before the earnings. So you can see that the Russell, regardless, was inside of value and really couldn't get into value area high even for the day. So it just, traded the value zone basically after, opening up below it, going down to an overnight low, sitting there screw around. And by the European close, which is where this blue dash line starts, and transitions at after the 2-hour close, it was in value. So basically we had a look below and fell, and we just went right back into the zone of comfort, which was value for the Russell. Looking at the NASDAQ, similar picture, except for it just engulfed its value area, right? Started off overnight low was down here, opened here, couldn't even take it out, went back up, traded through value at the European close. And this was also an area where trades went off above the bell high of the day on Wednesday night before futures close. So the NASDAQ was the only one to do that. And usually if you can't get up into that area and over it by the European close, it's late day afternoon resistance. So it was able to get up into this zone before the Europeans close, and it kind of just churned, around there. And if you look, I had marked some single prints from the previous Thursday on here. That's what these two yellow lines are, and it was really held in this lower. It was actually the middle distribution because the NASDAQ had three distributions that day, and here was the lower distribution. Down here, a raceway, a middle distribution, which is really where it was staying in, and then this would be the upper distribution. So same thing for the ES. So the ES we've been looking at, since we had the vaccine news a few weeks ago, we have not been able to trade back below the gap up when futures opened up that Wednesday night. So that was basically 31.90. So every time we approach 31.90, I'm looking to see if we can get below it, because that's been a line in the sand for the bulls and the bears to fight over, and the bears have just been getting their asses kicked. There's no two ways about it every time it goes down to that line. So you get close to that line and just total rejection right back up into value as well. I'm beating a dead horse now. You can see, remember, these last three bars are from after the earnings come out and after the bell close. So the Dow was substantially weaker, right? It couldn't even get back into the previous day's range, let alone into the previous day's value. So keep that in mind, how much weaker the Dow was yesterday as opposed to everything else. So then we get our earnings come out, and we can see, at 4 to 4:15, and then from 4:30 to 5 o'clock you add in Apple, the last two bars, and you can see that really helped everything. Actually, of course NASDAQ is the biggest beneficiary from that, but you can see that ES and the Dow also fared well because Apple is a component of the Dow. So let's just, before we get to here, let's look back at our year, right, so far. Just a one-day bell-to-bell bar chart of trading action, and really areas, the high-volume nodes from each trading day that have not traded back through since that trading day. So you can see, we've been kind of muscling up here, and as we got above, 3,000, this looked a lot different since we started, building on this action here. I said we were likely to get stuck in the zone for quite a while, right? Because churning through it, but it was likely to hold. So as we've come up through here, we've been looking for signs of failure, and it was really split up into two different areas. Now we're we had this little island. We screwed around with that island for a long time. We got back up above the island, but the last gap that we have here is basically from February 21st through February 24th. You can see there's some high volume, and this is a Friday to Monday. You can see there's some high volume nodes that go back to January 24th and also February 4th that have not traded, that we completely skipped through that when COVID first started, when we started our epic plunge. So this is where we are now. We had printed up, last week, we were up into this gap a little bit and failed and went back down lower, but we're unable to clear that vaccine gap low. So keep that in mind, that if we do start getting below this low, it's just going to take us back down into the previous range, which can go all the way down to 3104, but 3171 to 3162.75 is really what I'll be focused on first if we end up in the future failing before we clear ahead. So as we zoom into this area now, we could actually, anything is possible for the day. And to be honest with you, we didn't get as much volatility out of all the earnings last night as I thought was on the table. So I don't know. You can take that two ways, right? There's a little bit pent-up demand. We'll see how it turns out today. We'll see if traders want to basically, they have three choices, right? They can digest where we're currently at, which is right where we are the middle of last week on Monday, Tuesday, and basically Tuesday, Wednesday, and Thursday, before we, fell back down. So one thing I do every day is I look at where the floor trader pivots are for the level 4s. That is usually an extreme read for, where we could go during the day to the high end or the low end. So the low end is 31.51 quarter, the high end is 33.46 quarter. We're unlikely to trade, either extreme during a day. You can get, to the level 2s much easier, and then level 3 is a little bit harder, obviously. And then I do mark on the other charts that I use. I separate 4A. This is actually 4A. There's another calculation for 4B that's above and below these zones, but 4A is really the standard for looking for potential maximal movement for the day. And this is based on just the previous day's range and how the session went compared to the high and low and the close for the day. And for the close, we use the settlement. So it's just calculated numbers on there. I share it with my group. It's no secret. You can Google them, but I just mark them on the chart so we can see them. So as we look at where we're at on here, right, as I was getting back to why I was going through here, you have your standard three choices, right? We can digest where we're at, and we've already been here for 3 previous sessions, so it wouldn't be too hard of a toss to think that we could just range in this blue box today, which is the earnings box from last night. We can start paying up, right? We can start thinking that hey, they've already reported now. These guys are good to go. They're behemoths. Nothing hurts them. They are what's propping up the market. They are over, they are where they control the market, let's face it. They're the biggest companies, and they dominate in many different ways. And they have been not hurt by COVID, so we could continue buying, right? Push it up into these levels, see what we got up here. Or, as traders have been waiting on their earnings, right, that think that there's limited upside on the table for whatever reason right now, they could just start taking some profits, cutting their position size, trying to get a pullback to add back in later. So you got your basic 3 choices: consolidate where we are in the blue box, go up or come down, right? So watching those stocks today, those Facebook, Apple, Amazon, and Google, is really going to tell you really what the tone is for the day and how they do with their gap. And just watching this blue box is going to help us as well. So we'll get into the skinny of this now. So we haven't got out of this blue box really significantly, right? Right after futures open, we popped up all the way to 73.75. We come back down. We've popped above it to, basically 70 half, 70 quarter, right in there. But for the most part, we've been contained all night in this spike from the earnings. So we're going to monitor this for continuation. And really, if we, to be honest with you, there is a dominant line which is right on the pivot point today, which was close to yesterday's pivot point. So you can watch today's pivot point, the 32.29 quarter, as above or below line. There was definitely, if you draw a line here on the chart, and we'll just throw one out here real quick, right on the pivot point. You can definitely, and I drew this sloppily, so here, let's move it up a little bit. You can clearly see where traders were, below, and this was resistance. They crossed over it, and it was support. Classic, technical analysis movement 101. As basic as you can get when you're doing technical analysis. So this is going to be a key line to watch, I think, right around this 32.30, 32.29 area. If we start crossing below that, right, we're probably going to start heading back down and repair this vaccine gap finally. And if we get down to here, there'll be so much overhead supply, we can probably start testing a little bit lower, probably down to the 31.71 level. So I think that's the major line in the sand for the bulls to hold today. It's not really this gap, although that's going to be the first indicator that we watch. Now let's look at the rest of the indices a little bit. So as we look at the rest of these, we can see that the Dow and the Russell have been weaker for quite a while now. So as we look to see what's going on with them, they're well below that earnings box from last night for the Russell. The Dow is just flirting with the bottom of it. You can see the Nasdaq, right, is holding above it. That's going to be your tell for the session, is how the Nasdaq responds, because it's the one that's weighted the heaviest to those big earners that come out last night. So I'm not going to get into too much. I think today's kind of simple, to be honest with you. We're either going to consolidate, see if anyone's interested in pushing this thing higher, or we're going to kind of roll over as people take profits from here. And to be honest with you, nothing might not happen in the first 2, 3, 4 hours. We might not get a decision on this until between 2 o'clock and 4 o'clock this afternoon. So today could be a little rougher if we don't get things going dramatically in the first 2 hours. I would just, if you have your choices, if there's nothing that happens in the first 2 hours, you can take the rest of the trading day off, come back at it Sunday night, Monday morning, look and see what's going on and reevaluate, pick your levels, go over your strategies, and see what you want to do. Or if nothing happens in the first 2 hours, you can come back in the final 2 hours, because I'm fairly confident that you're going to get at least 15 to 25 points in that final hours of movement. You guys have a great day, and I will talk to you on Monday.